Tick 1.
And we'll talk more about that with my next guest, but we'll also get an update when I speak to our Canberra political reporter, Primrose Reardon, after the next segment. But for more analysis on these macro issues facing investors, Geoff Wood, Morphic Asset Management's Head of Risk and Macro, joins me live from our Sydney CBD studio. Geoff, thanks for being with us. Now, let's talk first the impact of North Korea's latest missile launch really on markets. I mean, markets seem to have, well, equities markets certainly seem to be ignoring it at this stage.
Yeah, exactly. I mean, so far the benefit of the doubt continues to be that this won't get escalated above and beyond the rhetoric that we're hearing at the moment. And probably your best case is if you look at Samsung, which is a globally held stock held in most sort of global portfolios in the US. US managers aren't selling it down, and at the moment sort of hopes around the release of a new phone are able to overcome fears around a war in and around North Korea.
Yeah, and I mean, do you think that basic sort of we'll just wait till it really happens is partly based on the fact that these are massively, hugely populated areas that we're talking about that could possibly hit by any military action? Neither side, no country wants to really go that next step.
That's exactly right. I mean, Steve Bannon, Trump's ex-strategist, said it perfectly when he said, until someone shows me how millions of people don't lose their life in Seoul within 30 minutes of military escalation, we don't have a solution here. And that's exactly it. I mean, this is the perfect demonstration of political checkmate, where neither side really can afford to escalate it to a military level without huge loss of life.
All right, so then what does that do to kind of a base case as in risk for markets? Do they buy in because markets have, I mean, I'm saying they've ignored it, but is it a buying opportunity?
Well, I think at the moment what we've also got is a lot of markets around the world have rallied very hard. So S&P 500, the US main index, is up 20% from Trump. HSCI, there's sort of H shares out of Hong Kong, that's up 20% year to date. So it's natural we find ourselves in this sort of consolidation pattern at the moment, which I think is the market kind of digesting the moves we've had so far recently, and this is just providing a good excuse to sort of sit back and not buy, and we're getting a lot of churn chop day to day at the moment.
All right, so would it be that, you know, that if there are pullbacks, they're more just corrections, they're not bear market territory? Exactly,
yeah. I mean, we talk a lot with a group called BBSP that are a sort of chartists out of Singapore who we rate really highly, and one of their favourite phrases is markets basically either work off excesses in time or space. Now, space is when you get a pullback or a decent move, and time is when markets sort of chop backwards and forwards through time and just consolidate, and it looks for now like it's more likely the latter. So you won't even necessarily get a great dip opportunity to buy per se. It may just do sort of day-to-day chopping action rather than those nice clean sell-offs where the dip buyers come in.
All right, and then in a sense, the situation in North Korea and I guess the stall over US debt ceiling discussions, is that sort of, in a sense, helping cover perhaps what might be policy failures at this stage in the new administration?
Well, you could make that case for sure. I mean, Trump.
In terms of, sorry, I mean to carry out things like his promises on taxes, that sort of thing.
Sure, yeah, I see what you're saying. I mean, Trump's political polling is sliding by the month, and it's well known that in these sort of scenarios where there's some sort of geopolitical concern, it can actually bolster a good leader. And so for now, Trump probably won't be that unhappy that he's got an excuse to tweet about North Korea rather than trying to defend some of his domestic issues around healthcare reform and getting these tax changes through that he'd promised when he was going into the election.
Yeah, all right. Now, just briefly on the today's GDP read, how do you see this? Because a lot of economists are saying, well, you know, it's just not good enough and the growth is slow, but it is still growing.
It is still growing. I mean, that's the main point. I mean, I was surprised. I thought it was going to be a decent beat today. But nevertheless, the market was looking for, the market estimate was missed by 0.1%. I mean, for the RBA, that's neither here nor there really, and ultimately the number was in line with their own expectations. So we don't change our view that there's a very positive backdrop here that's continuing to surprise generally to the upside.
Yeah, okay. So what does this do to sort of your investment strategy, looking at risks and, for instance, do you still have a fair amount in cash?
We don't anymore, actually. I mean, basically, we did last month when this kicked off, but as we've analysed it further and we think that ultimately this won't go any further with North Korea, we think it's just not actually a good bet to be holding cash at the moment, given the propensity for this market to rise. And we actually still really like the backdrop: good earnings, good global PMIs, and relatively loose monetary policy, which is ultimately a good backdrop for stocks.
All right, and speaking of coal, as we have been, and coal-fired power stations, you're still heavily involved in India, not necessarily there, but why?
India, well, not in the coal space, but we tend to avoid that area. But India, we still like structurally, with the Modi government, very pro-business, stable backdrop, good economic growth, and these sort of big changes around the power industry. That's a real laggard. If you ran a business in India, it wouldn't be unusual for you to get power cuts, and it makes it hard for everyone. So one of Modi's big drives is just to improve the way electricity gets distributed around India. Yep. And we've got a stock called Power Grid that's benefiting from that. All right. Nicely.
Okay, Geoff Wood from Morphic Asset Management. Great to talk to you. Thanks for joining us.
Thanks, Helen.
And coming up, we'll put the spotlight on today's top political issues. The Australian's Primrose Reardon joins me.